Hi, let us understand today what is financial planning. We will understand what is the actual process of financial planning, why it is absolutely essential for every individual, regardless of his age and income, to have his own financial plan, and what all is covered under a comprehensive financial plan. So, now let us understand the whole process. See, actually, the whole financial planning starts from the age of 25 when a person gets his first paycheck or a salary. He will spend some amount from that and will have some savings. Now here he is immediately confronted with that particular money, that what to do with this money. From this very moment, the role of a financial planner starts. Typically, as we know, a work life generally extends from 25 to 60 years of age, that is about 35 years, and thereafter comes your dream years of retirement. Mind well, this period is also not short because of increasing life expectancy. You have to consider this period to be about 30 to 40 years. Everyone would like to have a comfortable retirement life wherein he would love to live in a dream house with his spouse. He would love to go to foreign tours, do philanthropy and charity, and after all, he should be sure about his predictable, regular, inflation adjusted cash flow month on month, year on year for an extended period of 30 to 40 years till both of them rest in peace. So, during whole this journey from 25 years to 60 years, there are multiple other things which also happen for which you have to plan way ahead. So these we call different financial goals. Now what are they? First and foremost will be the construction of a house and buying a dream car. Second is, as the child starts growing, a couple would like to plan for their graduation, post graduation, and their weddings. Simultaneously, when this process is going on, how can one forget to build a step by step his ultimate retirement corpus? And at the same time, everyone would like to have some other lifestyle aspiration goals like charity and foreign tours. So, these are the different financial goals from your 25 years to 60 years. And every individual, more or less, will have to fulfill all these goals. Now, let us call this a plan A. Now, just tell me, is it guaranteed that everyone will be able to fulfill this plan as per his will? Just imagine that what if Almighty has some other plan, a plan B? What happens, God forbid, what happens if a person passes away after 5 to 10 years of his working life? What will happen to his all financial goals? And if he doesn't die, suppose if he end up having some of the critical illness, he'll be so crippled that he will no longer be able to earn thereafter. Not only that, he may become a lifetime liability for the family. And if he is the sole earner of the family, the situation will be even more complicated. So, a financial planner has to be ready with both the plans, plan A and plan B. So now, let us understand the whole process. First of all, just consider your financial life as a multi-story building. The first responsibility of a financial planner is to have a strong foundation. What all goes into the strong foundation? There are 4 things. Number 1, most important, is the adequate life insurance with accidental death insurance for adequate term. Second is adequate health insurance for the whole family. Third is critical illness cover. And fourth, adequate contingency fund. So The strength of this particular foundation depends upon how many stories you want to build upon it, right? So after the strong foundation, you have to start building your stories. The first story is about your house and car. Second is your education needs of your kids, graduation, post-graduation and their weddings. Third is your retirement planning, and the fourth one is your lifetime aspirational goals. So let us understand how the financial planner will plan for one particular goal. Let us take an example. Suppose a young couple having their first kid plans to send him for an education of MBA in some of the IIMs at the age of 21. Consider the present fee of IIM as 22 lakhs. Now financial planner first has to calculate what is the education inflation as on date. Suppose if it is 10%, the 22 lakhs today will be about 1.6 crores after 21 years. So what he will do, that he will advise this particular couple to invest some particular amount every monthly, and in which vehicle to invest, what amount is required, that he will decide by calculations, and ultimately he will make sure that by the time that particular kid becomes 21 years of age, he will be having a sufficient amount for that particular financial goal of education. So what he does, he will map every financial goal, whether it be your house or a car or an education or a wedding or a retirement. Every financial goal is mapped with a particular investment. Now he will decide the particular investment vehicle, what is the time period between the present day and the goal, what will be the amount required at that particular time, what will be the effect of inflation, and that is how he will make sure that you will fulfill all your goals. And God forbid, if something happens in between, your all goals are fulfilled otherwise also. So this is how the financial planning is being done. Now a comprehensive financial plan will cover 5 things. Number 1 is your insurance planning. Number 2 is your investment planning. Number 3 is your tax planning. 4th is your retirement planning. And 5th is your estate planning. So these 5 things is going under the heading of comprehensive financial plan. So today we have understood basic about the financial planning. Friends, have you prepared your financial plan? If not yet, it's not late. You feel free to contact me for any kind of guidance. Thank you very much, and bye-bye.